The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 10th day of December. My pleasure to be here. Dow's down 412 at 23,974. Interesting because Thursday and Friday, the Dow held the uptrend line. And today, and what I said to subscribers, based on my monthly and weekly reports over the weekend, well, actually Friday and this morning, is that the monthly chart, everything about the monthly chart is suggesting that it is really close to taking out key support. He just did that this morning, but we're not even halfway through the month. So that's really important because if you're looking at a candle, you have to wait for the candle to complete before discussing it as if it's a complete candle. It's not. It's only 1/3 of the way through. And so far, it's a very ugly 10-day candle, or 5 sessions, 6 sessions. But what's even more interesting is that in this rectangle formation in the weekly chart, you see that high of the 26th of January, in the Dow 26,616, down to 23,360, scurries back to 25,800. That was a huge up move. Plummets back down and takes out the left side low, the only index to do that, but it does create this H pattern. Just like on the left here, I've got an H pattern. So this H pattern here is a weekly chart. Then it has this fabulous rally all the way to an all-time high in October, 26,951. Cannot close above 26,616. Get the sell signal to sell mode starting on October the 4th in the Chapman wave for subscribers. And now what we're doing is we've gone from 24,122, the left side low, to a lower low today of 23,881. Now what we've done is just like we did in April, took out that left side low, and of course it's the beginning of the week, it's the first 3 hours of the week, so we can't talk about it as if the weekly close is below 24,122, but it has gone decisively below. That's almost 300 points. That is really, really important. Now this is what's going on. For subscribers, I showed, let me see if I can get that right here. I'll go live. I won't go to the one that I had. Am I going to find this? I think it's this one right here. Yep, there it is. I think this tells the story. In this particular chart, going back, I can go back as far as we want, but let's go to the peak that was made, peak F in the doji high candle right there, a little doji tiny candle. October, there's a monthly candle, October of 2007. Price of the Dow is at 14,198, and it plummets down and it goes all the way down to the low that was made in March of 2009 to 6,469. Then it starts an up move and it goes to a peak D, pulls back, and you can see it starts to set up parallel lines. And then it goes to another D, but then that goes E, F, and a G, a rare G, but it goes to a G in May of 2015 at 18,351. Pulls back, makes that H pattern that we just saw twice in the January to February low that was made this year. And then again, we've seen it on a short-term basis in the daily chart, the weekly chart, but it then goes to a peak E and it starts a brand new up channel all the way to an inside track repellent zone. So the high that was made January of this year, 26,616. Look how good the MACD was. Look how strong the stochastic was. But wait a minute, when it went to the 26,951 high in October, that was peak F. There's no other way. I've got to call this peak F. Call it as I see it. That stochastic was way weaker right there. The MACD was very weak. Now the MACD has gone negative. Stochastic is way down at 70% instead of being at 80%. You've gone into the Chapman wave inside track. There's a mid-channel. I wish I could color this in. We're in this mid-channel, and that's going to say that in the month of December, going to early January, 23,100 to 23,000 is going to be imperative to hold, especially the 23,300 level. Why? Because the 23,300 level, if I can show you this right here without messing up, right here, was the low that was made twice, in January and in April. So the sell mode that we're in the daily and the weekly, I have to wait the full month before I can declare that this is a sell signal even, not let alone a sell mode in the monthly chart. Everything about it is suggesting that the rallies have tremendous resistance now because we're at 22,000, let's call it 24,000. Because we're at 24,000, it makes the whole 24,700, 24,900 area, maybe even 25,100, 200, somewhere around there. Really strong resistance. Lower lows and lower highs is basically the theme I'm looking at now, even if we're getting extremely oversold on a purely technical basis in some indexes. But if I look at the stochastic and the MACD and the daily chart, we're at 35% in the stochastic. I'm anticipating we won't get a decent, really decent buy signal until we get into the single digits. And that could be a way down. All right, we've done that. Let's just get on with the whole story. S&P right now is down 32 points at 2,600. In a leg E, oh, I meant to show you this. This is a leg E. You see this lowercase h that goes to lowercase m? Now we've taken out the 2603 low that was made, 2583. We've taken that out. So the lowercase h that is also in the weekly chart, so far we've taken out the left side low. And if we are looking at where resistance is now with the stochastic and MACD negative, stochastic says 35%. Well, let's just say we can bounce to 47% of the stochastic. MACD gets a little bit back to just tickles the positive area. It's negative right now. That would say that the 2681 area, that's 800 points in the Dow. I mean, that's a lot, but we could do it. 2681 to 2692 are the two moving average resistance in the S&P. I wanted to quickly show you this because time is now very important. In the 120-minute chart, right here, 120-minute Dow chart, there it is. We're in leg 5 to the downside, but it's only leg C, maybe a tough C, but a leg C nevertheless. And that was really one of my targets. We were just nicked 24,242, and if we took that out, you got to be real careful because 24,122 was the previous low. So now what we're looking at is there's a chance that we could have another little attempt at a bounce. The NDX 100, funnily enough, has been showing some residual strength from early this morning. It was a little bit better. Now it's not. I'll be back. Basil Chapman, Tiger Technicians Hour. Let's just look at the E-mini 2, 5, and 10-minute charts. Yeah, made that peak D right there in the 2-minute chart. Fell from 2610 down to 20.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Everyone, we're back. So what we're looking at here is, within the context of the S&P, look, there's that H pattern and it went to a lower low. So it has another bar in which to close above the low of 2603.54. Remember, that was the base of support. Now we've gone under it. And now we've started a leg B in the monthly chart. When you get to a leg B in the monthly, well, I don't know what they're going to do in December to change the characteristic of the negative MACD and stochastic in the S&P. But everything about it, just like I was looking at the monthly chart of the Dow. So the monthly chart here of the S&P is way worse because it did not make a new high in October. That was in September at 2040.91. It's actually trading right now at 25. Let's call it 2600. Sorry, 2600. Yeah, 2600. And the all-time high, why did I say 2040? What am I doing? Amazon? It was 2940. That's not a 0, that's a 9. Okay, so you go 900 points, 1,000 points. Oh, 1,000 points of red light. All right, so what we're looking at is the QQQ series. The Qs right now have not taken out the left side low. As of this moment, they're down 100 at 160.26, down 1.11, down 0.69%. Dow's down 1.71. S&P's down 1.44. The Nasdaq is holding. I had a little trade, quick trade for subscribers this morning to my opening call, going along. If people did that, it was actually a very nice profit. I said, don't give up any profit when it reversed. So we got out for a break even. But in fact, there was a very nice trade. I mean, who would have thought that it would be as nice as that, and then give it up and then falter like it is? So the Qs this morning hit 162.76. They're trading at 160.31 right now. This is a very tough market. The tide has changed. There's just no question about it. Any short-term trade, any long trade, I believe, has to be a short-term trade unless you're in a different area and completely. We'll get to that part of it in a moment. IWM is, in fact, down 148 at 142.55, down 1%. It already taken out the left side low. This is really ugly action, and you're right on the monthly green uptrend support line. Whoa, just about to take it out. MACD's bad, stochastic's bad. Not a good sign. Not a good sign at all. IWM, Russell 2000. I want to go to gold. Gold should be up $55 to $70 from Thursday or Wednesday of last week. It is up nicely. And in fact, it is up from 1238 to 1258. So that's 20 points. On a chart basis, it got so close to the 200-period moving average, the gold itself, of 1,258. This morning, it hit 1,256.6. Now it's trading down 2.5, is at 1250. You know, it's been a really nice move. It has had the V-shaped pattern, the cup formation or V-shaped pattern. It is in a leg C. It's had this consistent cycle of rallying sharply, then coming back, giving back about a half or more of the gain, a stair-step move, and then another big move to the upside, like a 1-to-1 to the upside, gives it up, comes back about 3/4, holds this trend line, goes back again, goes towards the uptrend, up-channel resistance line. I don't know. All I can say is there must be really big buyers of the dollar, because the dollar right now is up 47 cents at 97.09. It's not a great pattern in terms of just basic chart formations in the daily. The weekly is okay. It's holding steady. It's in the kind of a rectangle formation. We remain long. We haven't taken anything off yet. We're very close to taking something off. But as I'm looking at this, I'm saying these are not hedge funds that can do this to the dollar, not under this kind of pressure. Look, the British pound, BP for a British pound, broken pound, I guess you could say, went to a lower low this morning, a very sharp decline. Of course, it's all on Brexit. Over the weekend, we were listening to a lot of the BBC and Sky News, etc., and they were just going on and on. I love watching Parliament. Was it the House of Commons? And yeah, it's not unlike politicians all over the show, but I just love that so-called extemporaneous back and forthing. You know, most of them are posturing. But I have to tell you, there was a sort of a modicum of organization, except when they yell, and they all stand up or they all sit down. All I can say is May has a really tough time. Well, it's not just her fault, but no, it's her fault. I mean, she's, you know, holding the baby here. I just think that if you look at the British pound, it's telling us the whole story. 1.2791, 1.2783. That's what I wanted to see. Okay. So this is in the weekly chart, new leg D to the downside. We are below where we were in January of 2017. So just above where we were in 2017 at about 1.2, just under 1.25. Now we're at 1.2633. Monthly chart says, yeah, you could start to find some kind of a base and then have a bit of a rally, but there's a real choppy aspect to this, and it better happen really soon. Better happen within a week from today. The British pound needs to be in the 1.29 area to say, phew, save the day, because if it's anywhere under 1.27, this is just going to go on for a long time. So good luck to the Brits to work this one out. Brexit is their own undoing. They misread the whole public opinion thing, just like we did here in the United States. There was discontent. If they don't understand that their discontent has to be played out and has to be resolved, otherwise it just continues. And both countries, you're going to just see this really, January into early February could be real tough all the way around if that's the case. All right. Now, what I want you to talk about is the EUR USD hasn't broken out of this range. Just like the dollar hasn't really broke. It's had a very nice rally, but it really hasn't broken range-wise. So the euro-dollar currency pair hasn't broken range-wise. It's gone from a high today of 1.4435 to 1.1371. Nothing to see here at this particular point, and the monthly chart is really not very good. The weekly chart is not very good, neither is the monthly chart. And if you look at the USD JPY, this is the yen dollar currency pair. Same thing, trading band, nothing to see here, folks. Something spectacular has to happen all the way around. And if you look at crude oil, down at $1.07, stuck in this lower range. Wow, I have to tell you, commodities, we'll come back, we'll look at the CCR, we'll look at the commodity index. Dow's down 382, S&P's down 36.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I got a bunch of emails coming right now, just a whole flood. All right. VIX index is trading at 2532. It just made a double top, an exact. I mean, this is down the S&P, go to new lows, IWM go to new lows, and the high of 25.94 made on the 6th of December, 25.94, 1 penny low today. Yeah. And 2551 is a resistance level, 2474, automated resistance levels, 10-minute chart, 2465 is support, and 26.25, 26.24 to 27.80 are the resistance levels in the VIX automated. Now, this is going to be very interesting because in the weekly chart, it's got 24.94, and then there's nothing above it. Just have a look. I say nothing above it. Yeah, nothing above it. Very interesting. And in the in the monthly chart, 28.14, and then nothing above it to 49.18. Huh. That's going to be very interesting. Okay. So we'll see how this plays out. Crude oil is down at 51.52. Nothing to see here yet. If it starts to trade for 2 out of 3 sessions, about 57. Wow, 57, are you kidding? About 55. Even that's 3.5 points away. About 55, that's going to be the first really good sign that crude oil could have a decent bounce. I was asked about AEM. This is Agnico Eagle trading in A, B, C, D, F, A, B, C, in leg C to the upside. Just double check that there wasn't a penny difference there. 55, 54, there was. You always have to check those pennies. So that's an F right there. This is a new move up. The reason why I've got a little, just very short term, I'm talking about 2-3 days cautious on gold, is because gold itself, look, this is a leg D, and it's above the 200-period exponential moving average. That's very good action. Leg C in the weekly chart underneath the moving average, 200-period moving average of 41.17. AEM is trading at 40.03, up 11 cents. Had a high today of 40.56. And if you look at, what did I say, AXP and AXP? No, AXP is American Express. ABX. Long weekend this. The ABX 14.08, leg C, unless it's a leg E, I really want to call it a leg C for many reasons. And yep, leg C. And if that's the case, it should go higher. And the weekly chart is good, leg B. Monthly chart is in leg B. Both of these are looking very good. And both of these could have a little bit of a pullback. If you look at the GDX is in leg C. Right at the 200-period moving average, should pull back a little bit and then maybe start on its way to test this really important weekly downtrend line at 21.07, 21.10 let's call it, and it's at 20.39 right now. So the gold line has finally got some traction, and they've held very well into the close Friday and into today. I still see, as long as the dollar is holding well, and it's at 97.06 right now, up 44 cents, that is just saying that money is flowing. That's what I was saying before. Maybe 1 or 2 countries find that it's important to hold the dollar. There was a report, just who posted it here? Peaky posted it into the den. The United States led effort to suppress the price of gold in order to preserve the premier status of the US dollar is allowing China and Russia to capitalize by purchasing huge quantities of gold reserves at artificially low prices. Now, 3 things. Number 1 is we don't know that the United States is trying to prop the dollar up. You would have thought that they'd want it lower, right? You don't know that it's an artificially low price for the gold. The price is the price. How do you know it's artificially low? I don't know who wrote this report, but I must say it isn't written very, let's see. Just reported, okay. And China might be catching up to Russia buying gold. And net purchases rose 42% year over year in the first quarter central bank net purchases. Okay, so those are facts, but the fact that you can't say it's under at this particular point, it's underpriced. How do you know the gold's underpriced? How do you know the dollar's not underpriced, overpriced? You don't. You just can only look back and say, at that point, it looks like it was overpriced, underpriced. But anyway, so I'm looking at this, I'm saying dollars held up very well. I'm suspecting, based on the chart formation, that if in the next week and a quarter, in other words, by Wednesday of next week, the dollar hasn't broken into the 97.80s, at least hit 98 once, then I think the dollar is in a sideways consolidation, and then probably sideways to down for a while as gold actually has a bit of a rally, a really good rally. I don't mean just this chop, chop, chop within a range. Now, the E-mini just had some nice action, trading at 26.06. If it can close above 26.12 in the next, what are we doing? By 10 minutes past 1 Eastern time, in another half an hour. That's going to say 26.14. The 200-period moving average is back in range, and we hit it earlier at 9:30 this morning. We were up there in the 26.35s, so that's going to be very important. And 26.23 is the same 200-period exponential moving average, having declined in the 5-minute chart. So far, I think that there's really strong attempts to find a base here. And there's a lot of evidence that says we are so oversold, we could easily have a rally, but big deal, you have a rally, you just dropped over 400 points. Now you're coming back, you're only down 300 points, but each lower low is big points. So you're going to have a rally of 13 to 1,500 points to really call it a counter-trend market rally. That is in the Dow. Okay, now I've got some questions. No, I haven't finished the TLT. This is the bonds. TLT makes a new high. Now, I am going to call it not an alternate wave count just yet. It's leg F. There's a chance that it could become F/B. I don't want to do that right now. I just want to go sequentially to the next higher peak. Leg B in the weekly chart, the TLT at 118.67 of 26 cents. This is really strong action. Not so much if you're looking at the weekly or the daily, but the weekly or the monthly, but the daily, this is really strong action. And I've been talking about money flowing out of the insecurity of securities, of stocks, into the so-called security of bonds. If the market starts to tank, and we've seen some kind of tanking action over the last week, let's see if this continues now, because if the TLT at 118.64 pushes into the 120s, this market's going down, relentlessly down. If, in fact, we're looking at the exact opposite and the TLT starts to fill in the gap under 116.50, hey, we might see a rally in the stocks. So we'll get to the questions in a moment. Did I not hear? Did I hear that? Yep, I hear a break. We've got a break coming up. We've got a couple of very interesting questions. I just wanted to quickly talk about the VIX one more time in a different context. The VIX right now hit resistance. It's in leg B, great leg B, but it hit this resistance and stalled right there. I'll be back. Basil Chapman, Tiger Technician Zone.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, so the E-mini is doing just that. It's gone to now 26.15. This is a 10-minute bar, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11. So back at 11:10, wait, these are 10-minute bars. Yeah, at 11:10, it was at 2,588.25. So now it's gotten back the big slide that it had earlier on. I like what I'm seeing here, and I really do think that there's a nice counter trend rally coming, and that it's going to be a bit of a surprise. And I had a question a short while ago about the Chapman wave trend gauge, and yeah, it was 4 consecutive high readings, and we've seen how you've not only got tremendous slides to the downside, but there have also been these very big counter trend rallies. So I think that's very important to make a note of. Okay, now let's get back to the nitty-gritties of the questions. FDX, what was the question? FDX minus 11, now it's minus 8 at 193. Yeah, this is a peak D in the daily. Okay, so let's just look at this. Federal Express makes an all-time high, a peak G in the Chapman wave methodology, and in the weekly chart, and the daily was a peak E, and then it gaps down. So it goes to, on the 17th of September, it goes to 259.25, gaps down, has a really sharp move down to a low in the 207.90 area. Then it starts a new buy mode and goes buy signal to buy mode and goes to a peak D just under the 200-period moving average, the orange line, hits 234.49. And now it's trading at 193, having hit 188 this morning. That is huge. And that's telling us about earnings, and it's telling us about the season. Because if we look at Amazon, what's the question about Amazon? How is Amazon holding? Yeah, Amazon holding right now with the 1420 round number low. It's in the second H pattern. Weekly chart is not very strong. Monthly chart says, hey, this is pretty darn good action considering 2050 down to 1420. 600 and what is it? 630 points. But it's gone right back to trading between the 9 and the 14 period moving average in the monthly chart. But wait a minute, Amazon is telling us about, as I said to my subscribers to my opening call webinar, there's still time. You can go to the webinar. Everything that we discussed is relevant to today, the webinar from last week. And you'll get if you get a subscription to my newsletter. So we're down 5 at 1624 in Amazon, not breaking down at all. But RTH, the retail index. So keep an eye on the chart. And now look at this one. Here comes the weekly. Not unlike Amazon, a little weaker now. This week, from the Friday into today's action, makes it a little bit weaker. So this doesn't seem to be saying that we're having a spectacular holiday season. We might sell more things, but the profits might be much weaker. That's kind of what I'm looking at. That tells me that January into early February might be where we're looking at if the lows that were made today in the Dow are taken out in the next 2-3 days, or if the Qs finally takes out that left side low. So, so that's RTH is the Market Vectors Retail Index. So Amazon right now says holding okay at 1626. But unless Amazon in the next, I wouldn't give it more than a week. In fact, I'm going to extend this cup formation a little bit longer and say that if it takes out 1570 on the downside, that's very negative action, but it could rally and could bounce into the 1680 to 1710 area if there is a decent rally in the market. But that weekly chart says doesn't matter. It's still lower lows and lower highs. Next question I had was Apple. One in the den, just mentioning Apple down just cents now. Yeah, this is a little green candle. It's in leg D. In the daily chart, it's in leg B. Now, I won't do it today. I don't think there's enough time. Maybe tomorrow I'm going to discuss the impact that I found over the years of straight line moves to the downside and straight line moves, even if they are made up of 2 legs down, with just a minor little trough, and then it extends down. What does it do to the overall chart pattern, and when is that a good sign? So I'll talk about that tomorrow. But in the meantime, Apple trying to rally here. Let's see the 120-minute chart. Yeah, it's a nice doji candle with a green candle. I don't see any reason why at this point, if there isn't any bad news from into today to tomorrow, that's asking a lot. But, you know, if Brexit, they've set it aside for now before they can vote. It just might give us a little delay, and you could see Apple bounce. But until it cracks the 175s, 178s, 9 and 14 period moving averages, and then closes sharply above, I think it's just chop, chop, chop. And I think it's a hat trick top as far as I'm concerned in most of the key stocks. Now let's go to the VIX rally into 319. Yeah, let's go looking at. I've got some things that I'm going to talk about tomorrow, maybe about the VIX index. Don't need to do it today. I don't think there's any need for it today. A question I had was, is this year like 2008, 2011, or 2012? Okay, you want to talk years? Here we go. This chart right here that I spent time on over the weekend, hadn't looked at it for a little while, and I thought, you know, this is just so much information. It's saying to me that there's a really good chance that we're going to make modest lows and modest highs, lower lows and lower highs, but not crash scenario, just sudden moves of 2 days or 3 days, sharp down, and then there's a retracement to the upside. My first inkling here that there could be some support at the next level, and that next level is going to be really key because 23,300s, we've now gone into the 23,000. We've been talking about the 23,300s for quite a while. We went there. A closing, weekly close under 23,300. Let's just round it off. Under 23,300 would suggest to me that the 22,800 to 22,400 would be the next area. But I think that there's enough counter trend bounces here to say that now we're going to start using much more time And price might look bad, but not in the context of percentages. In other words, 500 points, it looks horrible. That's only 2%. We've seen 2% moves in the stock market many times before. So the E-mini now is in leg C in a brand new buy mode. And it's at 26.22. Very nice action. And the 10-minute chart is in leg B. So, okay, let's get back here. Oh, is that a break? What a quick session this is. Basil, how come natural gas stocks are not running with the price of natural gas up so much? What do you think of RRC and MCF? We'll look at that in a moment. I'll be back. RRC is, whatever the heck it is. RRC is, Range Resources. I haven't looked at this for a while. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So this is what we're looking at here. Just a little final few. Yes, I got some questions. I'll deal with some of them tomorrow. I've gone through quite a few. But if FDX is down, Federal Express is down so sharply, and UPS, that's really not such a great sign for the season, okay? Or for Amazon. So here we go. In Investors Business Daily, BEAT. 1, top 50. Biotelemetry Inc. Trading at 64.59, down 70 cents, made a peak D daily, a leg E weekly, and a leg E monthly. So the question is, would you what would you be doing right now in terms of the Dow? Would you be short or long? I'm waiting for another very strong bounce, and then it'll be back to shorting. And I might even want to play the long side on a for traders only, that is. But the lower lows and lower highs, just keep thinking lower lows and lower highs. So beat, very important because it's just number one. It's just look at that fantastic stock. TTD, one of my favorites that we don't own. TTD is the Trade Desk Inc. self-serve ads. Makes a peak in the weekly cup formation. Hasn't gone back to the high of 161.50, peak F in the weekly chart. And leg E, then a peak E in the monthly. And this says, yeah, it's consolidating. It's one of those that's at the highs, but consolidating at the highs. Cyber, you could just go on and on with this. I'll do this until the break. I don't know what the notation is. Everything about it says that peak D in the monthly should be it, but CyberArk, Software Limited, Security Trading 75.29, up 77 cents. I think this is probably a leg C, and that there's a peak C, and that there will be a D, that it'll be one of those that finds support over the next 2-3 weeks and somehow, some way, manages to rally. I don't know if it can get back now to the high in the 84s, but at 80.75 right now, it looks reasonable. It's had a huge move lately. So, and you can just go on. Team, TAM, team is Atlassian Capital Corporation, up 2.48. Peak F in the monthly, peak D in the peak D in the monthly, peak F in the weekly, holding very well, but consolidating. And you can go on and on with these. They've all made what looks like at least monthly potential tops, but the weeklies are in sell modes in most of these, and these are the best. So I am very cautious, very cautious. A lot of cash we have here for subscribers. I'll be back tomorrow. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.